Hey everybody, this is Julian Marchese, and today I'm gonna just do a little video on reading order flow and using it with auction market theory, which is analyzing where value is in the markets. So what we're gonna do is we're gonna go over two markets. We're gonna go over actually three markets. We're gonna go over the German DAX market. We're gonna go over the E-mini S&P 500, and we're also gonna go over the oil market. And what we're gonna do is we're going to use these two charts over here. The chart on the left is a 30-minute footprint profile chart. Now I got these charts from Market Delta, but there are a few other charting providers that provide order flow analysis. I personally prefer Market Delta. That's the one I use. And it's the only one that offers this sort of footprint style with the volume clusters. But back to the two charts we're looking at. The chart on the left is a 30-minute footprint chart. What that is it shows at every price level how many contracts were traded there, and it shows a number to the right of it of exactly how many contracts. So for example, at the high right over here, this is the oil market. There were two contracts traded there, and because there was so little compared to the average down here of about, I would say, 500 contracts, there was nothing shown on the footprint side of it, the volume profile side of it. But when you get into the middle of these bars, you could see 941 contracts were traded here, and you could see the bar very clearly. The bar or price level is shaded either blue or red. If it's shaded blue, that means there were more buyers at that price level. If it was shaded red, that means there were more sellers at that price level. The deeper the hue of the color, the more aggressive the seller or buyer was. So for example, if we look at this bar, once again this bar over here, the whole upper side of this footprint is light blue. That means the buyers were not very aggressive. However, if we look at this bar over here, it was a very darker, most of the bar was darker red, and it was mostly all red, meaning there was an aggressive seller in that bar from 82.40 to 82.16. So what we do when we're looking at these charts is we look for volume clusters. Now volume clusters are areas where the market traded a lot of volume at, and you can see it on the right hand side by this volume profile. So if you look at the whole day, you can see there was a lot of volume traded in around the 81, 86 level, and a lot of volume was traded in around the 81s, psychological number also. So a lot of business is usually done in around that area. And on the left hand side you could see the 5-day profile, so this is showing where value is pretty much on a 5-day basis. So once again, going back to what I use this 30-minute footprint profile for, is I look for these volume clusters. So I saw volume clusters of these 4 bars over here in the overnight session of oil. So what I did was I drew a little line and I named it initiative selling. So you could see the market had a little cluster here of selling, and it proceeded to fall out of it. So I would name that initiative selling because the market fell out of it. If we look lower, you could see near the end of this bar there was another little cluster over here, and it followed through in the next bar. Now because the market in the next bar tested this high volume, built a little more high volume in here, and fell out of it, we would have to name that initiative selling once again. And there were a few more down here that I've taken out because they've been taken out in later bars, but as you can see there was some high volume here, and you can see it provided some resistance in the 81.92 level. So going back to the example of the order flow, you can see on the right hand side I have a 5-minute footprint chart. A 5-minute footprint chart shows every price level and exactly how many buyers and sellers there were. And same as the 30-minute profile I'm showing you on the left hand side, this shows it is colored either blue or red for either that price level has had more buyers or sellers. The darker the color, the more aggressive the buyer or the seller was. On the bottom you can see the overall volume of the bar. So if it's green, there was overall buying in the bar. If it's red, there's overall selling, and it shows how much in comparison to previous bars. So as you can see, going over an example of oil, this market was proceeding to fall. And we had a nice pullback here with some good volume. You could see the volume down here, dark blue. That means there was a lot of volume in that bar. But we did have a negative delta for the day, so we were overall short this market. When we came up here, see, we had a level in the 82.16s. As we were coming closer, we were getting less and less buyers. Look at this. See this? As the market came up and tested this area in the 82.16s, we had less and less buyers. 1,000 here, 500 here, 250 here, and only 100 there. And then we actually went negative. So once we went negative here, that means the order flow tide had changed. And we even proceeded to break higher, and we didn't find any more buyers. So that means this market is probably going to roll over. So what we do is we look for our nearest point of volume. You can see we had one in around the 82.02 to 81.98, and we also had a big large print there at 125. Once it pulled back here, you can see we had a nice entry to go short at 82. You can see price proceeded to fall. We had some large selling prints, and as you can see in the next bar, market proceeded to fall down to 81.80, and as you can see, we had a nice sell-off afterwards, a big drop down to the 81.10s. So that's an example. We had initiative selling in the 82.16 shown on the 30-minute profile, and what we do is we don't use the footprint on the right to take a trade. We use it for confirmation. So what we did is we saw less buyers, and it gave us more confidence to take a short trade because less buyers were coming in. So that works on oil. Let's take a look at the S&P 500. Now, as you can see, let's look at the footprint chart at the low of the day. As you can see on our 5-day profile, we had some volume in around the 1105s, and if we scroll back onto a 30-minute chart, let's bring up a 30-minute chart of the S&P. You can see we did have a cluster of volume over here which held as support on this day. But let's see what the footprint was doing at that point in time. So this is the low of the day of the E-mini S&P, and let's look at the order flow. As you can see, as we were having a big drop to the downside from around the 1115s to the 1107s, we were getting less sellers. And as we proceeded to fall, got less and less sellers. What does that mean? That means the sellers are getting less aggressive and the buyers are starting to show their faces. And once we got this up green bar over here, that's telling us pretty much that the tide has turned. So we're pretty much like the ocean, we're watching the tidal waves. And as you can see, the tidal wave of the market was down with much more selling, but we knew it was getting weaker. And once we saw the tide change to buying, there's your entry to get long. And as you can see, it held for the rest of the day. If you got in at 1105, you can see at the close we tested 1120. So that's a 15-point trade off of knowing that support level on the 30-minute. And as you can see, you could have moved your stop. You could have moved your stop higher. Let's say you got long because of the initiative buying starting to come through at 1106. Stop at 1104. You could see we had this cluster of volume where you got in. Look how it was holding the whole day. So you could have had your stop at 1105 the whole time. As long as this high volume held over here, that would probably mean that the market's going to go higher, and you could see it did. And the same thing looking at the DAX market. As you can see, near the lows of the day, we're just going to take a look at the same sort of area where the ES was at the low of the day. Look what selling was starting to do. The DAX was actually much stronger than the ES, and you could see in the order flow we had a capitulation move down, and on a bar that did not regain as much price as the down bar, you could see we had more buying volume. And as we proceeded to go lower, we had less and less sellers, and on the next bar you could see the tide changed, and that's your entry to get long. And as you could see, that held for the low of the day, and you could see this market proceeded to move higher. So that was a brief overview of order flow and how I use it. I use, once again, Market Delta as my charting platform. You could check out my new blog. It's 14oldfuturesdaytrader.blogspot.com. Thanks everyone.